Happy Friday, coming to you a day early this week, and welcome to 5 Minute Friday. Each week, we take a few minutes to step back from the financial headlines and focus on what actually matters for your long-term plan. Today, we're talking about three things: why markets keep shifting even without major breaking news, a simple mid-year strategy to stay aligned with rising costs, and one overlooked way retirees are creating a stronger sense of purpose. Let's jump in. If you have been following the news lately, you have noticed something interesting. Markets are still moving, sometimes quickly, even on days when there is no obvious major headline. That can feel confusing. But here is what is actually happening behind the scenes. Markets do not just react to big events, they also react to small changes in expectations. Updates on inflation, interest rates, and economic data continue to come in, and even minor shifts can influence how investors think about the future. So instead of reacting to one major story, markets are constantly adjusting to a steady flow of information. A simple way to think about it, it is less like a light switch turning on or off and more like a dimmer slowly adjusting. Key takeaway: short-term movement does not necessarily signal a major change in direction. It often reflects ongoing adjustments to new information. And a well-structured retirement strategy is designed to account for that reality. As always, this is a general information, not a prediction or recommendation, and your individual situation may be different. As we move further into June, there's one planning idea that tends to get overlooked. Your cost of living may have changed more than you realize, not because of major spending decisions, but because of gradual increases in everyday expenses. Things like insurance premiums, property related costs, travel and seasonal spending, everyday services. Individually, they may not stand out, but together they can quietly shift your financial baseline. Here is a simple mid-year exercise. Instead of asking, "Did I overspend?" ask, "Has my baseline changed?" Because those are two very different questions. And for many households nearing retirement or already in retirement, the challenge is not discipline, it is keeping the plan aligned with reality. Key takeaway: a mid-year check-in is not about restriction. It is about making sure your financial picture reflects the real world, not outdated assumptions. One of the most common concerns we hear from people approaching retirement is not financial. It is this: what will I do with my time? And more importantly, will it feel meaningful? What many retirees discover is that fulfillment does not come from staying busy. It comes from staying engaged in something that feels productive and intentional. We call this the back nine life phase. And one trend we are seeing more often is people creating self-defined roles in retirement. Not formal jobs, but structured involvement like advising or mentoring in your former field, helping organizations or causes that matter to you, taking on projects that require problem solving and creativity. The difference is autonomy. You control your time, your energy, and your level of involvement. Key takeaway: retirement is not just about having enough, it is about having something that continues to give your time value. If you enjoy content like this and want a more structured perspective on planning for retirement, make sure to like, subscribe, and follow along for future 5 Minute Fridays. And if you are thinking about how to better align your financial life as you approach retirement, we are always happy to have a conversation. So just reach out. Thanks for being here. Have a great weekend, and we will see you next time. Thanks. Bye.